Hey, what's up guys? John here. Big box retailers closed 4,600 stores last year.
CVS Health said today it's going to close about 900 stores.
Rite Aid, the pharmacy chain, says it plans to close up to 500 stores.
Walmart has announced a new round of store closures.
Target announced today that it's closing 9 stores in major cities.
Sounds like a big number. However, this year we're on track to double that. Double it. You start to really bring this whole story in. You start to look at what's really going on. This is the biggest story in America right now. It's not just the retailers. It's how this is going to impact all 330 million Americans. Because people, 70% of Americans' net worth is tied to their home. How is one's home's value determined? Some would say it's location. Some would say it's proximity to shops. Some would say it's near the beach and the ocean. And some would say it's the school districts. Well, all of this ties in heavily with what's happening in the local community. And when you have all of these stores closing up tons and tons and tons of locations, and a lot of people not interested in opening up new retail, taking in new office space, you start to imagine what's going to happen. You're going to start to see tons of vacancies.
Skyscrapers and office buildings once stacked high with businesses are experiencing high vacancy rates in the U.S.
But the big trillion-dollar question with a T is what's going to happen with all of this property? Well, when you start to understand the plan for it, you'll see clearly why this is going to restructure and change everything we know about America. Everything unfolding in San Francisco and all these big cities, all of this chaos, this isn't by mistake. People that are interested in investing and are not paying attention to this are going to lose a fortune. And those that are, and really tracking the data and tracking what the billionaire private equity firm founders and these really wealthy people are doing, they're going to be able to follow in their footsteps, on a smaller scale. I'll break this down for you. I'm going to give you the facts because I think this is going to change America forever. Please hit the like button. Hit the like button. YouTube will share this content to educate more people about what's going on in our economy. If you'd like to fix your credit to position yourself what I believe is going to be the greatest wealth transfer in American history, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow. Take a look at this. So May 13th, right? May 13th, 3,200 retailers. They say they've announced plans to close. Well, they pulled this information from the month prior, right? Going from January 1 until April. And so when you start to look at that, that's 4 months in. So 12 months in a year, ballpark, you would do 3x that, right? So you start to think about that, 9,000 or so total retailers closing, which is double last year. CVS, they're closing, or Rite Aid is closing 400 to 500 stores of their 2,200. You have Family Dollar closing now 600 stores as of a couple of weeks ago. You have, Home Plus and 71 Doom locations in 13 states. You have Big Lots closing stores. They're saying elevated inflation, July 5th. I mean, this is all happening right now. 7-Eleven on the 14th, 2 weeks ago, closing 250 locations. CVS, Rite Aid, Walgreens, all closing. When did this all come out? It came out this month. It all came out this month. And so Rite Aid's closing 27 locations in Michigan and Ohio, added to the growing number of stores it plans to close while it restructures under Chapter 11 bankruptcy. So when you see all these stores going under, you have to ask yourself, who's going to be on the hook for this? It's not going to be the stores. Sure, some of the shareholders that invest in the stock, might lose out. Maybe they even win big if they restructure everything and they find out some new way in which they can work towards profitability. But the real big winners are going to be the investors that are going to be buying up a lot of this distressed property from these banks and from these institutions holding the debt, right? Because they're going to be buying it at a much lower cost basis. When you're buying a retail strip center and you have an anchor tenant like Rite Aid, and you use that anchor tenant to attract other high-quality tenants, and then Rite Aid leaves, the value of that strip center is going to plummet, right? And especially when you consider that many people bought these strip centers over the last couple of years at 4 or 5% returns, thinking that rents are only going to go up. And then what happened? Rents actually are coming down, and the cost to borrow capital has doubled. Insurance and taxes through the roof. It's a bloodbath. And so you have to ask yourself, you have Red Lobster closing 99 restaurants. You have to ask yourself, what's going to happen? Well, this came out and 7 years ago, right? So just to follow this trend to where we are right now. So 7 years ago, an investor acquired this mall and they converted it into 2,000 apartments. 2,000 apartments, right? 7 years ago. And back then, you look more than 7 years old, Forbes. Back then, that was crazy. Nobody was doing that. And now, everyone is talking about these office to housing conversions. Many people say, you know what, it's not possible, doesn't make any financial sense. Other people think it's a great thing. But what I'm going to tell you is that, and this is coming from someone that just drove all across America the last month and a half. I've been in nearly every major city. There's so much construction unfolding right now. It is unreal. You go to Austin, Phoenix, it's crazy. Nashville, Atlanta, San Francisco, on the outskirts. You start to go in a lot of these markets, you're seeing tons and tons and tons of new apartments, new houses, and distressed real estate, commercial real estate. And so what's going to happen with these commercial properties? You have a market like Nashville. 18% of all office buildings are vacant. That's right around the national average right now, 18%. Pre-2020, national average is about 5%. And so a lot of these office buildings are trading for numbers that we haven't seen in decades. Like there's a lot of deals that are selling now at look at this, for example. Just in Holiday Inn, Washington, D.C. sells at an 80% discount to debt owed. 80%. This sold for $18.5 million. There's only one bidder. The lender owed $83 million. So absolutely crazy. I mean, look at this deal, for example. This property, it sold for $75 million in 2015. It just sold. They're expecting bids in the $16 million range. Look how stunning this property is. Look how stunning that is. And, that's in a prime area in Chicago, right? So you start to look at this and you can see what's going to happen. We're at a 50-year high in apartment construction. There's so much inventory coming on. A lot of landlords are in very, very, very big trouble. Multifamily landlords that have apartments. And as this is happening, the government is subsidizing and they are issuing funding to developers and investors to convert these office buildings into housing, issuing even more inventory on the market. Now, many people say this is a great thing because what's going to happen is rents are going to come down and finally things will be affordable. And I love that theory. Maybe, we have this perfect way that we get there with affordable rents. But what would actually happen is that most of these investors and landlords that acquired these properties over the last decade or so, they have a lot of debt, most of them. And that debt is something that they have to service every single month. And if repairs expenses associated to their mortgage, insurance, and taxes are all going up and rents are continuing to fall, they're going to have this cost burden that's going to offset the possibility of them holding on to the property. And so if rents drop 10, 15, 20%, you're going to see a bloodbath. And that's, in fact, what's unfolding right now. I mean, it's pretty shocking. Like, for example, Florida. Right now, 9.21% is the average rent price. That's how much it's dropped. 9.21% drop in the median average rent, which is currently $2,000, down 1.14%. Well, in Austin, rents are down 12.6%. Jacksonville, 12.4%. San Diego, 11.4%. San Francisco, 6.1%. Tampa, 6%. Orlando, Seattle, Nashville. All these markets are seeing rents going down, and they're only going to continue to go down in the short term in many of these markets that have seen an influx of construction. As we start to see things like this, I mean, a new real estate trend, shopping malls converted into residential units in South Florida. Here, buyer found for Enfield Square mall to be converted into retail housing. $250 million came out 2 months ago. You have even schools getting converted. This December, they converted a 33-unit building at $90,000. They spent $90,000 abandoned school, right? Michigan schools, April, 3 schools. It's absolutely shocking. Detroit is to convert old school into apartments. Former school 10 in Dunkirk to become an apartment complex. So you're starting to see this happen all across the board. Probably in the last, let's see, in the last month, how many of these? So yeah, I mean, you're seeing tons of these. 3 pages talking about converting schools, just schools, not talking about converting anything else, just schools. So you're going to see a ton of inventory, and I think you're going to see a lot of distress unfolding in the real estate market, not to mention this major major event that's going to happen with all of these banks that nobody's talking about. This BTFP program, this bank term funding program, 1,804 banks are on the hook for $165 billion in loans that they have to start paying back as of March. So you start to think about this. From now until March 10th of next year, 1,804 banks have to pay back $165 billion in loans. And so what happened is all of these banks that have all of these assets that their values have simply just eroded, they got a line of credit as if the asset didn't lose a single penny in value. And these banks, they got these loans from the Fed, from the Bank Term Funding Program, and now they have to pay back these balances at 100% value. So there was no discount taken into consideration. And now these banks are in worse shape than ever. That's why you have the CEO of Starwood Capital saying that we're going to see a scenario where we could see 1 to 2 bank failures every single week, and at the best case, 1 a week. Well, think about how crazy that would be, right? So you're going to see a ton of distress unfolding. I believe at a level of distress that we've never before seen. I mean, whitehouse.gov, even right on their website, they're saying, look at this. They're saying the vacancy rates have reduced foot traffic to the office-adjacent economy, reducing demand at local businesses, including restaurants, dry cleaners, convenience stores, retailers, and hair salons. A new initiative announced today by the Biden-Harris administration helps accelerate conversions of commercial properties to residential use, presenting an opportunity to prevent such a loop, right? And so all of the markets that had tons of inventory being built right now, Dallas, Houston, Atlanta, San Francisco, Denver, Seattle, Philly, Phoenix, all of these markets with tons of apartment inventory hitting the market are also going to have a lot more opportunity for these new investors to come in there, scoop up these deals for pennies on the dollar and convert it with cheap debt they're going to be able to get from the government, because the government's issuing $35 billion in lending. $35 billion in lending, and they're not going to be lending at 7%. They're issuing attractive interest rates to lure in investors to be able to do this. So, and this is also going to be for rehab projects too. So it's going to be pretty shocking. A new White House plan to create affordable housing, convert empty office buildings. They're talking something like 2 million affordable units is what they're looking for. There's just no way rents are going to be able to maintain. There's just no way. I think we're going to see a lot of stress hitting a lot of these landlords that paid way too much for their properties over the last couple of years, from now until 2025, 2026, 2027. They're saying that $2.2 trillion has to mature over the next 3.5 years. That's 10% of all commercial property in America. Commercial property is not just office buildings. It's industrial property. It's multifamily property. Commercial property encompasses 5 units and above. Across all of these sectors, all throughout the entire U.S. economy, you have to understand that we're walking into like a 1929 type event for a lot of leveraged landlords, and a 2009, 2010, 2011 type of buying opportunity for those that are positioned accordingly. What do you think about this entire situation? Let's have a conversation about this below. And if you'd like to fix your credit to position yourself for funding to invest in distressed real estate, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow. Catch you next video.